right now. The Dow down more than 300 points. The NASDAQ down 147. Jared Blikre is tracking all of the market action for us, including GameStop. Right, Jared?
Including GameStop. And we're going to see lots of red on our screen until we get there. Let's take a look at the Wi-Fi Interactive. And we are seeing the markets under pressure. All the majors down more than 1% right here. And the Russell 2000 off about 0.5%. Looking inside the NASDAQ 100, lots of red here as well, except for Microsoft after earnings. Nice beats there for Microsoft, up 2%. But aside from that, Facebook and Alphabet really underperforming here. Facebook, after the bell today, will be announcing its earnings. I believe Alphabet is a bit later, but even Netflix, T-Mobile, JD.com, AMD, after earnings, all these stocks down more than 3%. And here's the sector action for today. Only energy in the green, bucking a couple days of losses. Tech and staples also outperforming. But to the downside, it's healthcare, financials, and communication services that are the biggest losers. And finally, here is some of that green that we've been talking about. Everybody's been waiting for. GameStop up 133%. And I got to tell you guys, I've been adding to this board all day as I see stocks just going gangbusters here. It's not just Express, AMC, and GameStop costs, which we were talking about yesterday. That's up 250% today alone. You look over the last 5 days, 910%. And one of my favorites here is Blockbuster Video, up 171%, trading at 14 cents. Well, last week, this was trading at less than a penny. In fact, 1/3 of a penny. And over the trailing week, up 4,000%, guys. Insane, right?
Stuff
what do you say?
It's just crazy fun. Insane. Yeah, some of this stuff is just crazy to talk about. And it's strange because, normally you'd look at the crypto space for some of these moves, but we're seeing it play out in traditional companies now. But Jared, obviously, one move caught your eye as Bitcoin dipped below 30,000.
Yeah, Bitcoin dipped below 30,000 here. Easy to forget that we have another entire asset class in the making that has been receiving some huge money flows, but not recently. All that money seems to be pouring into other asset classes like penny stocks. So here's over the last 5 days, but here's the 1 month performance. And I just want to point out that we are still caught in this negative downtrend line. We do have some support here at 30,000, which we seem to have found, but we cracked this, probably going back down to 25,000, possibly below that to 20,000. If we do rally here, I'm looking for a breakout around 35,000, probably test these highs and soar above them. But let's not get ahead of ourselves. We got to wait for that next big pop in the markets here, guys.
And Jared, as we try to sort of make sense of all of these moves that are happening right now, along with our viewers, it does feel like there is a real Vlad Tenev earlier, the co-founder of Robinhood, called it a movement. I'm not sure if it's to that extent, but there definitely does seem to be something that's going beyond GameStop in terms of these retail traders feeling really empowered to take the fight directly to these hedge funds and the institutional investors, which of course is all materializing GameStop, but we've seen it translate to other stocks too. I want to play this from our conversation with Vlad Tenev earlier today to talk about the sentiment of some of the traders on his platform and what he thinks is actually playing out in the markets right now.
Retail investors and individuals have felt like they've been talked down to. Lots of them have felt like they haven't been taken seriously. There's this term, sophisticated investor, that's been thrown around. So there's an idea that they're unsophisticated. And I think that people are seeing that they now have the ability to invest, and they're empowered.
Jared, you've been talking to the more traditional traders as well. What are you hearing about their take on the action? To the point that Vlad just made, we have seen, for example, Melvin Capital, which was in fact shorting this stock, telling R and S Frey that they have in fact repositioned their portfolio over the past few days and closed out their position in GameStop. And those on this Reddit feed would argue that that's a big win for us.
Yeah, well, I'll tell you what, Wall Street Bets doesn't really believe them either, that they've mitigated their losses somehow. And this is class warfare. I'm going to call this Occupy Wall Street 2.0. Now, the first one 10 years ago, that was physical, physically occupying that land by the exchange down there by the bowl. And now they're occupying, they're betting with money and actually making a difference. Now, a lot of these stocks are small, and so hedge fund exposure is relatively low in the grand scheme of things. but they're blowing up. And I don't see this going away anytime soon because there's blood in the water right now. And you just take a look at what's happening with, what's the mechanism by which you're making these trades? These are call options. You're buying call options, so they have embedded leverage. Now, these are weekly mainly, so they'll be expiring on Friday. They'll be expiring next Friday. And even if they're assigned, I don't know that they're going to have the capital position to hold them. So maybe they're just going into cash. My point is they're going to have to roll these positions and keep the pressure up. I think the big one is going to be in 3 weeks when we get monthly expiration of all the options. That's when the rubber meets the road. So what's going to take down these stocks? Nothing short of probably a general market meltdown. And we see, if you see the S&P 500 down another 5-10% in the coming weeks, that'd probably wipe out a lot of gains in these positions. Short of that, I don't see them going away.
Yeah, Jared, you say class warfare. I'm also reminded of kind of age warfare too, right? The idea of millennials and boomers going at it for the last few years is nothing new. And you think about Robinhood being a trading platform levered to younger Americans and customers. I think that that's something to note here as well, because retail investors, as we discussed with Vlad, kind of getting trashed nonstop. People saying, look, these Robinhood traders are dumb. They don't know what they're doing. But if you go back and look at it, as I did yesterday, you look at some of the stuff posted in Wall Street Bets, Roaring Kitty, the guy was using Yahoo Finance. He had our charts up behind him in his YouTube videos talking about his thesis. That is also joined in by the likes of Michael Burry, the star of Big Short, and what happened there. I mean, these are real theses talking about short squeezes, something that we're seeing now, not just a GameStop story anymore, but really looking at other companies to replicate what's being done here. It's not dumb. None of this is dumb, which I think is getting lost in a lot of conversation from this story.
Yeah, and Zach, if I can jump in here, it's interesting that so much of this has been sort of dubbed as sort of the younger traders who don't know what they're doing. But I thought it was interesting to hear from Andrew Left at Citron Research earlier, who in a statement that he posted, a video statement, he said, look, I've been there before. I have been on your side, sort of making the calls, trying to sort of question where these institutional investors are. I understand what's playing out. And I wonder if there is going to be ultimately a sentiment shift. But, the larger question I think that we're going to continue to follow as well, Jared, is this something for the SEC to get involved? And this is something we talked about yesterday in the show. Is there anything inherently illegal happening? I mean, if we look at what's playing out on the surface, I mean, this is just trading that's playing out. This is the market dictating the price of these stocks. But is there a point where the SEC raises some concern today? This is just too speculative and could ultimately be destabilizing for the market overall.
I don't know that it's going to be approached as a systemic problem. They could use that rhetoric, and there are some real losses here. So I'm imagining that, there's a lot of pressure at the SEC to do something. And it is illegal to tout stocks on message boards unless you have an investment thesis. So there's probably some degree of illegal activity happening. And I'm not saying that I agree that it's illegal, but could be construed that way. 20 years ago, people on Yahoo Finance message boards ended up getting prosecuted by the SEC. This situation isn't that different. So I think there is a case to be made, and there's probably enough losses at this point that, at firms like Citron and Melvin Capital to justify the SEC getting involved. But it's not going to happen anytime soon.
I'd echo what we heard from Ines Ferre and kind of the take when she was speaking with some of these Wall Street Bet users on the Reddit boards, just highlighting the fact that, a lot of networks have hedge fund managers come on, pump their positions and leave and enjoy the day, to have it flipped on its head, to see it now a problem all of a sudden. Very interesting to see that play out. But Jared Blikre, appreciate you staying here with